Most traders believe patience is about waiting, waiting for the right setup, waiting for confirmation, waiting for the market to behave. But that belief is exactly why patience feels so painful. The market does not reward waiting. It rewards clarity. And clarity comes from understanding something most traders never see. Patience is not a behavior. It is a psychological state. When patience feels hard, it's not because the market is slow, it's because the mind is still demanding certainty in an environment that offers none. The moment you stop trying to force outcomes, the moment you stop needing the market to prove you right, patience stops being an effort. It becomes automatic. Impatience is never about the market moving too slowly. It is always about the mind demanding resolution. The moment impatience appears, something deeper has already happened internally. You have attached your sense of correctness, safety, or self-worth to a specific outcome. At that point, the trade is no longer just a trade. It has become a referendum on whether you are right or wrong, competent or incompetent, smart or foolish. And the market has no interest in answering those questions on your timeline. The market does not respond to emotional urgency. It does not speed up because you are uncomfortable. It does not clarify because you are uncertain. When a trader becomes impatient, what they are really experiencing is the tension between uncertainty and the mind's desire for certainty. That tension is unbearable only when the trader believes that certainty is necessary to feel okay. Every impulsive entry, every early exit, every adjustment made out of frustration is an attempt to escape that tension. The trader is not acting to improve performance, they are acting to relieve emotional discomfort. And that discomfort exists for one reason only: the trader is still emotionally invested in being right. The need to be right creates a silent contract with the market. It says, if I analyze correctly, if I wait long enough, if I'm smart enough, you should reward me. When that reward does not arrive quickly, impatience surfaces. But the market never agreed to that contract. The market offers opportunity, not validation. It offers probabilities, not guarantees. The moment you expect it to behave otherwise, you have already stepped into conflict with reality. True impatience is a signal. It is proof that the trader still believes the next outcome matters more than the process. It is proof that the trader is still measuring success by immediate results instead of long-term consistency. As long as a single trade feels important, waiting will feel painful. As long as the outcome of the next candle feels personal, patience will feel like restraint instead of freedom. Emotionally mature traders do not wait because they are disciplined. They wait because nothing inside them is demanding action. There is no internal voice screaming that this moment is special, that this opportunity is rare, that missing this move would be a mistake. That voice only exists when fear is present. Fear of missing out, fear of being wrong, fear that this trade defines you. When you are no longer emotionally invested in being right, time loses its power over you. Waiting no longer feels like wasted potential. It feels like alignment. You are not holding yourself back. You are allowing the market to do what it does without interference. The absence of impatience is not passive. It is a state of psychological neutrality. Neutrality is impossible when you are still trying to prove something. If you need the trade to work to feel confident, you will rush. If you need confirmation to feel safe, you will hesitate. If you need the market to agree with your analysis, you will overmanage. These behaviors are not flaws in strategy. They are symptoms of attachment. The market exposes attachment mercilessly. It moves in ways that feel deliberately unfair to anyone who believes they deserve a particular outcome. But there is no fairness or unfairness in probabilities. There is only distribution. Once you understand this not just intellectually but emotionally, impatience has nothing to feed on. The trader who accepts uncertainty completely does not ask, why isn't it moving yet? They understand that time has no obligation to reward anticipation. They are not waiting for the market to confirm their intelligence. They are simply present, executing when conditions align and standing aside when they do not. Impatience thrives on the illusion that action equals control. Doing something feels safer than doing nothing when uncertainty is uncomfortable. But control in trading is an illusion. The only control you ever had was over your risk and your execution. Everything else was always outside your reach. The moment you accept this fully, the urge to act prematurely dissolves. Being emotionally invested in being right means you are still trading your beliefs about the market instead of trading the market itself. You are trading what you think should happen, not what is actually happening. And when reality does not cooperate, frustration appears. That frustration is the mind resisting information it does not want to accept. Patience in its truest form is not endurance. It is agreement with reality. It is the absence of internal resistance. When you agree that anything can happen and that it doesn't matter which outcome occurs next, waiting becomes effortless. You are not suppressing impulses, you simply don't have them. This is why patience cannot be trained through rules alone. You cannot command yourself to stop feeling urgent, still believing the outcome defines you. The belief system must change first. You must no longer see being right as valuable. You must see consistency as valuable. You must see execution as success regardless of outcome. Once that shift happens, impatience becomes impossible. There is nothing left to rush toward. There is nothing to escape from. You are no longer trying to force the market to justify your presence. You are participating without expectation. The paradox is simple. The more you care about being right, the harder patience becomes. The less you care, the more naturally it appears. Professional consistency is born not from effort, but from surrender. Surrender to probabilities. Surrender to randomness. Surrender to the understanding that your edge does not need urgency to work. When impatience disappears, clarity emerges. You see setups more clearly because you are not desperate to find them. You manage risk more calmly because you are not emotionally tied to outcome. You exit without hesitation because you are not negotiating with hope. And in that state, the market stops feeling like an opponent. It becomes what it always was, a neutral environment offering opportunities to those who are psychologically prepared to accept uncertainty without resistance. True patience is not the ability to sit still while waiting for a result. That version of patience is forced, fragile, and temporary. It relies on self-control, and self-control always breaks under ional pressure. Real patience is something entirely different. It is what naturally emerges when you no longer need the next outcome to justify your actions. It is born the moment you trust the process more than you crave the result. Most traders believe they are impatient because the market moves slowly or unpredictably. That is never the real reason. Impatience appears when the mind is still focused on what this trade must deliver. The moment the outcome becomes important, time becomes unbearable. Every candle feels too long. Every pause feels like a threat. This has nothing to do with market conditions and everything to do with where your trust is placed. If your trust is in outcomes, patience will always feel like suffering. Outcomes are random in the short term. They fluctuate, disappoint, and surprise. Trusting outcomes means tying your emotional state to something you cannot control. That creates constant tension. The mind keeps checking, evaluating, judging, hoping, and in that state, waiting feels like weakness instead of strength. Trusting the process changes everything. The process is the only thing in trading that exists entirely within your control. Your rules, your risk, your execution, your consistency. When your confidence comes from following your process instead of predicting results, the emotional urgency disappears. There is nothing left to rush. You are no longer trying to extract reassurance from the market. Impatience is the mind asking for proof. Proof that you are right, proof that your analysis works, proof that your time was not wasted. But the market does not provide proof on demand. It provides data over a series of trades. When you understand this deeply, the desire for immediate confirmation fades. You no longer need the next trade to work. You only need to execute it correctly. Most traders say they trust their system, but their behavior reveals otherwise. If you hesitate to enter, you do not trust your edge. If you exit early, you do not trust probabilities. If you overtrade, you do not trust opportunity flow. These are not discipline problems. They are trust problems. And trust cannot be faked. Trust is built when you accept that a single outcome has no meaning. One trade cannot validate or invalidate a method. One win does not make you skilled. One loss does not make you incompetent. When you emotionally accept this, patience stops being an effort. You are no longer waiting for the market to reward you. You are simply participating in a process that unfolds over time. When you trust the process, you stop negotiating with the market. You stop asking it to behave a certain way. You stop expecting it to align with your opinions. You allow it to do whatever it does, knowing that your edge expresses itself across many occurrences, not one moment. This acceptance removes the internal friction that creates impatience. The mind becomes restless only when it believes something important is at stake right now. True. Sting the process removes that belief. Nothing critical depends on the next tick. Nothing meaningful depends on the next trade. Your success is no longer fragile. It is distributed across time, protected by consistency. This is why patience cannot be developed through techniques alone. You cannot count candles, distract yourself, or repeat affirmations and expect patience to last if you still believe outcomes matter. As long as profit is the goal, impatience will return. As long as execution is the goal, patience will remain. Professional traders do not wait because they are trying to be patient. They wait because there is no emotional reward attached to acting early. Acting outside the process feels uncomfortable to them, not waiting. Their confidence comes from alignment, not activity. When nothing needs to happen, there is no pressure to make something happen. Trusting the process also means accepting losing streaks without emotional reaction. Losses only feel heavy when you believe they shouldn't be happening. When you trust your edge, losses are expected. They are part of the distribution. They do not threaten you, they do not rush you, they do not push you into action. They simply pass. This is the moment most traders struggle with the most. They intellectually understand probabilities, but emotionally they still expect fairness. They expect effort to be rewarded quickly. They expect patience to be compensated immediately. When that doesn't happen, frustration appears. That frustration is not about money. It is about broken expectations. Trust dissolves expectations. When you truly trust the process, you stop demanding that the market behave politely. You stop measuring progress by short-term results. You stop feeling betrayed by randomness. And in that psychological space, patience becomes effortless. The irony is that the more you focus on outcomes, the less consistent your results become. Outcome focus leads to overmanagement, hesitation, and impulsive decisions. Process focus leads to calm execution, clear perception, and stable performance. Patience is simply the visible side effect of that internal shift. When patience is real, it does not feel like waiting, it feels like readiness. You are alert, engaged, and present, but not urgent. You are not resisting time, you are aligned with it. The market can take as long as it wants, and nothing inside you tightens or demands. This state cannot be forced. It emerges naturally when you stop asking the market to give you something and start asking yourself. Only one question: did I follow my process? When that becomes the only metric that matters, impatience loses its purpose. Trusting the process is not blind faith. It is grounded understanding. It is knowing, through experience and acceptance, that consistency is inevitable when execution is consistent. It is knowing that your edge does not need emotional involvement to work. It only needs repetition. Once this understanding becomes part of how you see trading, patience is no longer something you try to master. It becomes who you are while trading. And from that state, clarity, discipline, and consistency arise naturally, without struggle, without force, and without fear of the next outcome. Patience is often misunderstood because most people believe it is something you do. They believe patience is an action, a restraint, a pause, a form of discipline applied against impulse, but that definition already places patience in conflict with desire, and anything that exists in conflict eventually collapses. Real patience does not fight urgency, it dissolves it. And it dissolves it only when the mind no longer depends on outcomes for emotional stability. The moment a trader shifts focus from outcome to process, patience stops feeling like endurance and starts feeling like alignment. There is no tension in alignment. Tension only exists when you want something to happen that is not happening yet. When you trust the process, nothing is missing in the present moment. There is nothing to rush toward and nothing to escape from. Most impatience is created by a false sense of importance placed on the next trade. The mind convinces itself that this moment matters more than all the others, that this setup is special, that this opportunity must not be missed, that this result must arrive soon. These thoughts feel logical, but they are driven by fear, not clarity. Fear that opportunities are limited, fear that time is being wasted, fear that the market owes you something. Trusting the process removes these fears at their root. When you truly understand that opportunities are endless and your edge expresses itself over a large sample size, the next trade loses its emotional weight. It becomes just one occurrence in a long series. And when something is no longer emotionally heavy, waiting does not feel difficult. The market does not reward impatience or patience. It does not see either. It only reflects behavior over time. When you trust outcomes, you react. When you trust process, you respond. Reaction is emotional and urgent. Response is neutral and precise. Patience is simply the absence of emotional reaction. Traders who struggle with patience are not weak or undisciplined. They are still trying to extract certainty from an uncertain environment. They want reassurance. They want confirmation. They want the market to tell them they're on the right path. But the market never speaks in single events. It speaks in patterns that emerge only after repetition. Trusting the process means you stop asking the market questions it cannot answer. You stop asking, will this trade work? And start asking, did I execute correctly? That shift alone changes everything. Your emotional state becomes independent of price movement. You are no longer watching the chart for validation. You are simply observing information. This is why true patience cannot coexist with hope. Hope is outcome-focused. E says, I need this to work. Process says, it doesn't matter if this works. As long as hope is present, impatience will follow. Hope creates waiting with expectation, and expectation creates tension. Process creates participation without attachment. When you trust the process, losses no longer create urgency. They no longer trigger revenge trading or overanalysis. They no longer make you feel behind. Losses are expected, neutral, and already accounted for. There's no need to make something happen quickly to compensate for them. The process handles that over time. Most traders intellectually understand this but emotionally reject it. They say they believe in probabilities, yet they still feel pressure when price stalls. That pressure reveals where trust truly lives. Trust is not what you say you believe. Trust is what you feel when nothing is happening. If you feel restless when the market is quiet, you are still outcome dependent. If you feel tempted to enter without confirmation, you are still outcome dependent. If you feel frustrated when price moves without you, you are still outcome dependent. Trusting the process removes all of these reactions because there is no longer a belief that you missed something essential. Process-based traders do not feel late, early, lucky, or unlucky. Those concepts belong to outcome thinking. They feel aligned or misaligned. Aligned means they followed their rules. Misaligned means they didn't. Nothing else matters. Patience grows naturally from this mindset because there is no psychological reward for breaking the process. Acting early feels wrong. Overtrading feels uncomfortable, not because of discipline, but because it violates identity. The trader no longer sees themselves as someone who reacts. They see themselves as someone who executes. When identity changes, effort disappears. You don't try to be patient any more than you try to breathe, you simply are. The mind no longer negotiates with time. It no longer checks the chart for emotional reasons. It waits without waiting. Trusting the process also means accepting boredom. Many traders confuse boredom with danger. They believe if nothing is happening, something is wrong. This belief comes from overstimulation and the need for constant engagement. But boredom is a sign of neutrality. It means the market is not pulling you emotionally. It means you are not forcing meaning where none exists. The process does not promise excitement. It promises consistency, and consistency is quiet. It is repetitive. It is emotionally uneventful. Patience thrives in this environment because there is no drama to react to. The greatest paradox is that patience cannot be pursued directly. The moment you try to be patient, you are already fighting yourself. Patience appears only when there is nothing left to resist. Trusting the process removes resistance because it removes expectation. You no longer expect the market to reward you quickly. You no longer expect every session to matter. You no longer expect clarity on demand. You expect randomness, and because you expect it, it no longer disturbs you. This is the state where execution becomes clean. Entries are taken without hesitation. Exits are taken without regret. Missed trades do not linger in the mind. Winning trades do not inflate confidence. Losing trades do not damage it. Everything flows through the same neutral filter. That neutrality is patience. Not waiting, not restraint, not control, just trust. Trust that the process works over time. Trust that you don't need to know what happens next. Trust that consistency is inevitable when execution is consistent. In trading, patience is not about forcing yourself to wait. It is a natural byproduct of trust. When you stop attaching your emotions to outcomes and instead commit fully to the process, impatience disappears. You no longer react to every tick or trade, you respond with clarity, discipline, and confidence. True patience emerges from understanding that consistency is built over time, not in a single moment. By trusting your process above all else, you align yourself with the market rather than fighting it, and in that alignment, effortless patience becomes your greatest advantage.